Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 2nd of July. All right, now the start of a new month, new data, new opportunities coming up. So there's a lot to look forward to this month, especially this week with the the first week of the month, always having the non-farm payrolls on Friday, always shakes up things. But just have a look at where we've started the week and the month for that matter. There's a few geopolitical events circulating that you need to be aware of. Now, the first one here, Trump's come in, once again, blast OPEC, sort of told OPEC that they've got to stop manipulating prices of oil. Now, that's been going on since the beginning of time. So I don't know if he's trying to pick a fight with OPEC. I'd say OPEC would win that one. But he's also threatening, this is how he's leveraging, threatening European companies that do business with Iran as well, or any sort of countries involved in that, sanctioning those companies. Now, that's going to create a fair bit of geopolitical issue between, once again, the sort of European allies as such and the US. Of course, oil fell $1. Trump also suggested that, or did say on TV in the US, that Saudi Arabia had agreed to produce more oil. Okay, so that's seen oil sort of jump around a bit. The other important thing to note is that Trump was also saying that he was not going to do a NAFTA deal with Canada and Mexico until after the November congressional elections. Right, we're in July, so this is going to keep a big cloud over Canada. Mexico, of course, but Canada's a heavy, one of the major currency pairs or one of the major currencies. Big player of the G7, so he's still dragging that the chain on that one. Then across the in Europe itself, now dollar dips as euro migration deal boosts euro. Now that's a little bit of a mixed one, because basically there's been a lot of pressure on the German Chancellor Angela Merkel to get the coalition government back in place, and immigration has been a huge issue, right? It looks like the Germans are sick to death of the continuous migration of refugees, so they're trying to stop that. Now, the deal with the EU migration allows the refugees to be split across all of Europe, not just Germany. Now that's sort of a little bit positive, sure, but then we have also had one of the German, the Bavarian head guy sort of pulling out of the whole thing. So basically, there's a lot of uncertainty in Europe, obviously coming from Trump, coming from the EU migration, coming from the breakdown that coalition that Merkel's trying to get together to get that German government going. And I'd say they'd be quite dispirited with the fact that their soccer team is out of the World Cup as well. Now, sterling, okay, it's a little bit higher, and they're sort of saying on UK GDP revisions, yeah, sure, that had a little impact, but it was more weak US numbers than anything else. Now, if I just come across, I just want to take you over to where we finished the week. And what we're talking about there is, just before I come into the technical side of things, just having a look at the numbers coming out Friday. Now, the main part I sort of looked at here was, where is the major sort of high impacting stuff? So we had the European inflation. Yeah, sure, it's at 2%, which is nice, which is solid. That's a little bit of a boost. But year on year, it was slightly weaker. Okay, it takes a little bit of shine off. If anything, the US data here, and even including the University of Michigan sentiment numbers, weaker. The consumption numbers, this is a big PCE numbers are pretty good towards inflation. They were weaker as well, so that's a slightly weaker dollar. And then you come down and have a look at the, if anything, the slightly stronger GDP numbers out of Canada. Okay, so once again, putting a little bit more pressure on the Bank of Canada to potentially raise rates at their July meeting. I think it's up to about 80% chance of a hike in July. So just be aware that those numbers, and we know the breakdown, there's been a significant breakdown in the correlation with oil and dollar CAD. That's probably going to, or it did snap back into play on Friday. Now, if we just take a look at the technical setup of the major pairs here at the moment, you've got okay, the Aussie slowly, it's pretty much trading sideways, but slightly, well, it's higher from where it was on the start of trade on Friday. Not hugely getting excited at this point. You can see the Kiwi just rounding out down the bottom here as well. We're just lacking a bit of direction there. And that's where there's the start of a new month. We get new data across the board for all currency pairs, and that's what we'll get with those with the Aussie and Kiwi. Now, dollar yen starting to form a pretty nice sort of upward shape. The geopolitical issues, are still simmering. Don't forget, we haven't heard anything from China or the US after Trump's, I'd say tough words, rough words, whatever you want to look at it, the week before. So still, there's a fair bit of uncertainty hanging over dollar yen, but it does, it's sort of trading sideways on an hourly perspective, but starting to edge higher. And the US 10 years yields, treasury yields, starting to edge higher as well. So that'll bring some normal shape, bit of upward movement to dollar yen. Euro, okay, now we have, actually I forgot to mention there at the start, so we did have a little bit of a gap here on the open on most of these major pairs. So just be aware of that. If I just actually widen this out, I want to give you a bit of a look at this. This is reasonably important. So just having a look here, as you can see on the open, there's a few things impacting the euro, right? And if I just come up over here, okay, so you sort of closed around 116, sort of 85, and the open was around 50, 116.50, pushed down towards 30, and it's now back at 70. Now this is one of those moments, which is a very good example of why you wouldn't run positions over the weekend at the moment. There's so many geopolitical issues. There's nothing to stop that being a 100-point move. In this case, it was sort of 40. That's probably enough to flush most traders out. So with the varying news here on euro, it's a bit of a tough one. You just want to let the market open up on Monday, right? Jumping into the market and thinking, oh, I'll trade the gap, that is completely insane, right? It's not a strategy. I know people out there think it is, but it's not. So and even you can see here, sterling experienced the same sort of movements. What it was is the initial shock. Whether it's the Trump deal, whether it's the German minister resigning, whether it's something else out there, basically you've just got a bit of movement. The market was quite cautious. Now it's back to where it was, where they closed. So just factor this in. Sterling, there's a bit of a turnaround. Sterling a few days ago, once again, was sort of really on its knees. The sentiment, steady sentiment from the Bank of England, and also the slightly stronger GDP numbers have it back to the top side. And don't forget those weak PCE numbers out of the US also has the US dollar on the back foot, and that's where sterling is getting its strength from. Dollar CAD, now, as I said, that NAFTA, that announcement from Trump, there's two things here, right? So you can see the bit of the gap here in the oil price. So it was around 73.50. It's sort of dropped down to 72.5. This is on the fact that he's saying Saudi Arabia agreed to produce more oil. Now, then you've also got the fact that NAFTA, they're not going to do any NAFTA agreements until November. That keeps a lot of pressure on dollar CAD, a lot of uncertainty. Now, the GDP numbers on Friday, stronger out of Canada, once again putting a bit of upward bias or a hawkish tone on the Bank of Canada in this month. So just keep an eye on that. Sort of at the moment, the correlation between oil and dollar CAD has sort of reconnected, but there's a few geopolitical issues there that we have to deal with, and it's not an easy trade at this stage. But you keep following these things because you don't know when it's just going to snap into a really nice, easy trade. I know a lot of our traders nailed that GDP numbers on Friday. Pretty good way to sort of nail things. We know it should be lower. We're looking for that catalyst, and those GDP numbers were the main aim of those numbers. All right, now let's just have a look at the US dollar. Okay, as we start the week, start the fresh month, you just got to keep this in the back of your mind. Now, the US dollar itself, to me, is pretty much trading sideways. It is still in an upward bias on a long-term perspective. If you're looking at the dailies, it has sort of stalled up here again, under 96. But what you can see is we've got support here too. So this week we get fresh US numbers, especially those non-farm payrolls on Friday. We get the FOMC minutes as well. There's a lot of things to look at, and we should get a fresh bit of momentum on the US dollar. Now, it's either going to be as business as usual or stronger. It's hard to see it turning around at the moment to being weak, but that's where those geopolitical issues come in. They sort of make things a little bit cloudy. So the dollar, you know, it has sort of pulled back at the end of last week, but no big deal. I think it's still in a bit of an uptrend. Looking at the equity markets where they closed on Friday, the US equity is pretty tight, you know, slightly up, so no big deal there. The Nikkei due to open up 30 points up. So just keep an eye on the Nikkei, because we do have the Tankan numbers coming out here in Japan in about 6 minutes, right? Now, this is a good 10 minutes before that Tokyo stock market opens, and that's where you want to see the direction. So, and why that's important, if I just come back, let me just change the screens over here. I want to keep getting you focused on the yen crosses. Now, this is where a lot of cash sits particularly in the Asian session. Instead of just trading the majors, make sure you're having a look at these. Now, we had a bit of a snap higher in a few of these on Friday. Now, the Aussie and Euro, Aussie yen and Euro yen, two really clean snaps higher. The Kiwi just slowly, a little bit more patient. Now, sterling yen jumped higher, but the price action here is pretty wild. I mean, if you're hanging into that trade, you've done a good job. And we always sort of knew that, and I've been talking about this for some time, that the reconnection of CAD yen with oil, well, you can see how it's snapped in. But once again, the price action on the way up here was not exactly easy by any stretch. Now, the big brother here, this is the one pair that we need to watch, is dollar yen. Because dollar yen will give us the direction for these yen crosses. It is starting to edge higher. Okay, the movement here on a lot of these other crosses was dollar driven. Okay, US dollar driven on the back of those weak US numbers. So just bear in mind dollar yen. Now, there's a bit of uncertainty around dollar yen, around the geopolitical events. But if it does start to move one way or the other, we could get some more movement on these crosses. And at the moment, they look like a bit of dog's breakfast to me. We've got a few days to wait to get all these yen crosses once again sort of forming a really good shape. At the moment, they're in the middle of nowhere. If anything, dollar yen, out of all the yen crosses, dollar yen looks like the nicest trade. We do have a bit of a slight short-term uptrend. We've got a bit of an Ichiban sort of strategy set up there on the cloud as well with that trend line there. So the yen crosses, dollar yen's probably the pick of the bunch at this stage. Now, once you what you want to do is, you just want to plan your week, right? So this is where you've got to get a little bit organised. And once again, so just coming back to have a look at where the major opportunities are this week. To me, the first real upcoming event is the UK manufacturing PMI. Now, that's in just under 9 hours time, so the start of the UK session. But just as we start the week, you've got to bear in mind that if you have had a look around the news, we do have a few geopolitical events simmering. The majors are actually sort of trading quite cleanly, and we do have some good trend lines around, so it's worth keeping a very close eye on things. But this is where you come through 2 days of where the market's been shut over the weekend. These geopolitical events need to be factored in, and at the moment, no one really wants to sort of push it one way or the other, because they're just waiting probably for the European or North American session to really get stuck in. Now, the week ahead, just having a look down the upcoming events, it's a pretty solid week, but don't forget, so we've got Monday, UK manufacturing, Tuesday, the RBA, as we come into that, UK construction numbers, Wednesday, retail sales figures and the services PMI, also the US non-manufacturing. Then you've got crude oil, FOMC minutes, US non-farm payrolls, etc. So the one thing is, it's going to be a little bit disjointed. Don't forget the July 4 holiday in the UK, in the US. Sorry. So it's going to break up the week a little bit. Now, that doesn't really screw up the trading week, but there'll be one day where there'll be less liquidity in the US. Okay, on Wednesday. So just be aware that there may be some it could be a little bit more volatile. If we do get some good numbers here out of Australia, the UK, anywhere else for that matter, then that could really come into play and we may see some decent moves. So just bear in mind, when the US has a holiday, a lot of the other markets do seem to switch off. It's just a historical thing they do. So once again, once we reconnect on the Thursday, you will be sort of hitting all the buttons again. We've got the crude oil inventories. Now, this is going to come into play, especially the way oil's moving around. And now Trump's got Saudi Arabia, so they're saying they'll produce more oil. FOMC minutes, obviously the non-farm payrolls. And unfortunately this month, we do have the CAD and the US employment numbers out on Friday at the same time. So that's a real disjointed affair. If anything, it just means the US non-farm payrolls dominates and the CAD sort of falls in behind it. So anyway, there's a start of a new month. We've got loads of fresh data out. We've got lots of opportunities coming up across the board. If anything, I was just going through the daily analysis sort of snapshot. We do have just to start the week. We've got a few geopolitical events on. Euro definitely being impacted, and obviously dollar CAD as well. The technical aspect, we had a couple of these. I still think on the daily and weekly charts, Aussie and Kiwi are still heading lower, right? But we're getting no sort of fundamental direction from these pairs. UK has, as I said, turned around. We've got a slight bit of strong data. The Bank of England is in the hawkish sort of side of things. So fundamentally, sterling looks like it still has room to go higher. But technically now we're getting a bit of a cloudy sort of picture as far as the technical picture goes. And that goes for most of the major pairs. Dollar CAD, Bank of Canada, sort of hawkish with regards to their rate expectations, and strong GDP numbers had it moving lower. But there's so many variable events. And this is not uncommon for Monday. So just have a look at the daily analysis snapshot. Give yourself a good look. What we're looking for is, out of all the fresh data this month, is clear fundamental outlook from some of these currencies. And once we get that to line up with the technical perspective, that's when we're going to get some good trading opportunities on the major pairs. At the moment, they're a little bit sketchy. I wouldn't be getting too heavily involved today. Definitely have a look at that UK, as I said, that UK manufacturing PMI. That's definitely a good number to start the week. And that's where we are at this stage. So there's not much more to do except, you've got your charts there, and just make sure you tune up your technical levels, know exactly where the main pressure points are, those key levels. As I said, Aussie's got some on the top side. We've probably got the start of a support line down here. Kiwi, to me, still downtrend. If anything, probably looking to sell on a rally. Dollar yen, I'm waiting for a bit more updates on the geopolitical side of things, as is dollar CAD. Dollar CAD's pretty tricky at the moment. If anything, you're watching oil, but we know that there's been a big discombobulation there with that correlation. If anything, on the sterling, I sort of still like sterling lower, and Brexit pops up every now and again, but we do have a good technical level here. We might have a nice potential break trade at the top side. So to me, those UK manufacturing numbers come at the right time. If they're weak, we've got a good level to sell against. If they're strong, we've got a potential break trade there on the top side. Euro, I mean, it's sort of just banging away. There's a couple of different issues here impacting Euro at the moment. So I'm probably going to give that a bit of breathing room, a bit of space to move. If anything, I still like it lower, but it is hanging in there around 116 3/4. And that's pretty much it, guys. There's plenty on. There's plenty of opportunity this week. There's no need to rush in and get super carried away on Monday. Let the markets open up. Let them settle down. Let's find out where the key levels are. We've got some charts. We've got loads of data coming out. So it's just nice and patient as we go. If you have any questions, send us an email or jump in the trade zone. We'll have a good trading month. All right, guys. Good luck. All the very best.